Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, February 11, 2009. Following yesterday's risk aversion and sell-off in carry trade pairs, today saw less volatility and more sideways action as traders paused to further assess what the new U.S. financial plan means to the markets, following a day when a lack of clarity hurt investor sentiment. The Euro-Yen pair, which fell to support at 115.90 at the end of yesterday's trading, consolidated in a 110 pip range, but was close to testing its support again in New York afternoon trading. In the UK, the economy cut 73.8 thousand jobs in January, less than in December and a smaller amount than forecast by economists. Still, it's the third month in a row that job losses were larger than 70,000 and shows the deteriorating situation in the UK labour market. The unemployment rate, which lags the claimant count by 1 month, increased to 6.3% for the month ending December. In his speech following the release of the Bank of England inflation report, Bank of England Governor Mervyn King said that with the UK in a deep recession, the bank will have to switch to more unconventional methods to increase nominal spending. The bank signaled it would cut rates further, with some thinking a cut to zero in the March meeting, and that it would shift to a policy of quantitative easing. This way, the bank would create money and then use it to buy securities such as government and corporate bonds. The bank already got authority to buy securities using government money, but today's comments go one step further. The pound came into today already pressured versus its major rivals prior to the release of the Bank of England inflation report. Today, the pound dollar fell further below 1.45, reaching 1.4335 in afternoon New York trading. The fall below 1.45 could be an important indication that the recent rally in the pound may see a bigger retracement than what was provided yesterday. The euro-pound pair rose overnight, climbing 140 pips and rising above short-term resistance at the 0.89 level. The pair crested at 0.9030 and gave up about a third of its gains in the New York session. In the U.S., the trade deficit narrowed to $39.9 billion in December, which disappointed forecasts on the downside, but was still the smallest trade deficit in almost 6 years. Both exports and imports declined, but the reduction in the volume of imports outpaced the reduction in exports, helping the balance. Imports, which were down 5.5% following a 12% decline in November, were at their lowest level since September of 2005. The euro-dollar pair rose overnight to the 1.30 level, which was lower than yesterday's high, and then reversed in New York trading as the greenback gained on safe haven demand in the New York session. The pair hit as low as 1.2830 by 2:30 p.m. Eastern. The dollar-yen pair fell further overnight as Asian traders sold off the pair following the European and U.S. markets' reactions to the unveiling of Geithner's plan. After touching 89.70, the pair rose 100 pips in early New York trading. That rally was turned back at the 90.75 level. U.S. stocks were generally higher in the morning, but fell into the red in afternoon trading, taking the sales out of the small counter rally. Stocks did get a late boost as news filtered in that a deal was reached on a $789 billion stimulus plan between the Senate and the House. In Canada, the trade balance turned into a deficit for the first time since 1976. The 500 million Canadian dollar deficit came in as a surprise to economists, but shows the effects of the global economic downturn on Canadian exports, especially when it comes to the United States. Exports to the U.S. fell 10%, and the trade balance between the two fell to its lowest level since December of 1998. The U.S. dollar-Canadian dollar pair stuck to about a 130 pip range in today's trading, testing resistance from Friday near 1.2530. The pair's support for the session came from the 1.24 level. Price action showed indecision, though the greenback managed to hold its strong gains from yesterday. Oil prices were down to $36 a barrel as inventories in the U.S. rose for a 7th week. Tonight, the Asia-Pacific region has several releases. First, New Zealand posts its manufacturing PMI and food price index. Japan releases its corporate goods price index, and Australia posts its employment data for January and a quarterly measure of business confidence. Overnight, the Eurozone posts data on industrial production, and Switzerland releases info on consumer confidence. Tomorrow, the U.S. has 3 releases, retail sales, jobless claims, and business inventories. And that wraps up today's edition of our broadcast. Thank you for joining us here at cmsfx.com, and happy trading.